Paris, 1719. Crowds swarm a narrow street. Fortunes changing hands by the minute. From nobles to servants, everyone's trading paper, shouting prices no one understands. Servants elbow past dukes. A chimney sweep negotiates with a countess. The world has turned upside down. They say, contracts worth fortunes were signed on a hunchback's back. How did a street in Paris become the Wall Street of Europe? And how did it all collapse? This is the story of the Mississippi Bubble, when money became pure imagination. Picture Paris, 1715. The Sun King, Louis XIV, is dead. His wars had left France drowning in debt. Estimates range from 2 to 3 billion livres in debt, against annual revenue of roughly 150 million. That's roughly 13 to 20 times the annual revenue, an impossible ratio. The treasury was empty. Gold was scarce. France teetered on the edge of bankruptcy. Enter John Law, a Scottish economist with an idea ahead of its time. But Law wasn't just any economist. He was a banker, gambler, and escaped convict. In 1694, he killed a man named Edward Wilson in a duel over a woman. Sentenced to death in England, he escaped prison and gambled his way across Europe. Venice, Genoa, Paris, studying money, risk, and human behavior. He approached the French regent with a radical idea: create a bank that issues paper money, backed not by gold reserves, but by something more abstract: economic activity and future trade. The French regent, desperate for a solution, gave Law unprecedented power. But Law didn't stop there. He tied this paper money to something far more ambitious. He linked these notes to shares in the Mississippi Company, which held exclusive trading rights to Louisiana, a territory the size of modern-day Argentina. The promise was intoxicating. Louisiana held mountains of gold, endless silver, exotic resources waiting to be claimed. France just needed to unlock it. As Law expanded credit and printed more money, something extraordinary happened. Paris erupted into a financial carnival, unlike anything the world had ever seen. By August 1719, shares were trading at 1,000 livres. By December, 2,000 livres. By January 1720, 5,000 livres. The stock price exploded from 500 to 10,000 livres in just 8 months, a 1,900% gain. And everyone wanted in. Rue Quincampoix became the beating heart of the market. This narrow street, so tight 2 carriages couldn't pass, turned into one of the most valuable in Europe. Shop owners rented doorways as makeshift trading offices. One cobbler reportedly earned more renting his shop than he had making shoes all his life. Servants quit their positions to buy shares. Nobles and commoners queued side by side. One observer noted dukes and market women sometimes shared the same benches. Wealth was now determined by belief in paper, not bloodline. John Law became a celebrity in Paris, his carriage mobbed, his every move tracked. The fascination was near religious, as people hoped to replicate his success. But Richard Cantillon, an Irish-French economist, did something radical. He did the math. Louisiana's actual revenue, tobacco, furs, minimal precious metals, couldn't justify the valuation. At 10,000 livres per share, the company would need profits greater than France's entire GDP. He sold shares at the peak, later repurchased them at a fraction of the cost, converted his gains to gold, and safeguarded his wealth abroad. Period letters reveal the crowd's mindset. Everyone around me grows wealthy while I stand still. Am I wise, or am I the fool? FOMO wasn't invented in 2020. It was perfected in 1719. But as 1720 wore on, reality began to whisper. And by summer it would scream. By April 1720, Prince D'Aconti, a member of the royal family who'd made a fortune on paper, showed up at the Royal Bank with 3 wagons full of banknotes. He demanded they be converted to gold coins, as Law had promised. The bank couldn't do it. If the Royal Bank couldn't pay a prince, how would it pay anyone else? In July, Massive crowds crushed against the bank's doors. Contemporary accounts reported approximately 15 deaths from trampling. People died in stampedes for paper money that was rapidly becoming worthless. As people scrambled to understand what had gone wrong, the truth became unavoidable. Louisiana's promised mountains of gold and silver, they didn't exist. The Mississippi Company had some tobacco, some furs, but nothing close to the wealth law had promised. The entire valuation was built on a colonial fantasy. The panic began slowly, then accelerated into chaos. By May, the stock price was falling. By September, it was collapsing. By December 1720, shares that had peaked at 10,000 livres were trading for 500, back where they started. Those who bought at the top had lost 95% of their investment. John Law, once hailed as France's financial savior, fled the country in December 1720. He died 9 years later in Venice, broke, the same man who had briefly controlled more wealth than anyone in Europe. The paper money he'd created was declared worthless by royal decree. The aftermath was catastrophic. France swore off paper money for decades, scarred by the collapse. An entire generation relied on metal coins for security. Fast forward 3 centuries. The tools changed. The psychology didn't. John Law's Mississippi Company promised gold in America that didn't exist. Pets.com promised profitable delivery of dog food when the economics made no sense. NFT projects promised digital ownership would revolutionize art, while selling JPEGs anyone could screenshot. All crashed for the same reason. The math never worked, but the crowd was so loud, no one could hear the numbers. So here's the uncomfortable question. What bubble are we living through right now? Is it AI? AI valuations adding trillions to market caps based on future promises that may or may not materialize. Or something else entirely. Something we're all too close to see clearly. Richard Cantillon didn't predict the future. He just questioned the present when everyone else was intoxicated by possibility. Maybe that's the real skill, not knowing when to buy, but knowing when to ask. Does this actually make sense? The numbers are always there. The question is whether we're willing to look at them when everyone around us is getting rich by not looking. History may or may not repeat, but it always rhymes. And if you listen carefully, you can hear the echo. In every age, the bubble isn't in the market, it's in our minds. We've seen how one man's gamble changed the course of a country. In the next video, we'll walk through how a monopoly company crushed an entire nation and changed global trade forever. Subscribe to see how corporate power reshaped the world.